Welcome to this guide on tax residency certificates and Form 6166, where we'll walk you through how to avoid double taxation and reduce foreign withholding. Over the next few minutes, I'll explain what Form 6166 does, who should get it, the application steps, timing considerations, common mistakes to avoid, and how Make My Financials can support you through the entire process. Form 6166 is the US version of a tax residency certificate issued by the IRS to confirm that you or your company were a US tax resident for a specific year. This matters because many countries require proof of residency before applying treaty benefits, and without it, payers may withhold default rates of 25 to 30% or more on payments to you. If you receive income from abroad, claim treaty benefits, run a US company with international payments, invest overseas, or interact with foreign tax authorities that request residency proof, Form 6166 is relevant. In short, anyone who wants reduced withholding under a bilateral treaty or needs to demonstrate legitimate US tax residency should consider getting this certificate. Having Form 6166 opens access to reduced withholding tax rates under treaties and helps prevent being taxed twice on the same income. It also improves credibility with foreign tax authorities and financial institutions and smooths cross border payments and investments by providing verified US residency proof that payers and partners can rely on. To apply for Form 6166, you must be a US person or entity that files US federal income tax returns and have filed the required returns for the year in question. You request the certificate by submitting Form 8802, specifying the tax year and destination country, and paying the IRS user fee. So prepare supporting documentation in advance to avoid delays. Timing matters because Form 6166 is tax year specific and must match the year when the foreign tax was imposed. Apply well before you need to present it abroad to prevent processing delays. Ensure the certificate aligns with the treaty requirements of the destination country. And remember, it may need annual renewal if your tax residency status or the treaty conditions change. Common mistakes can cost time and money, so avoid filing late, applying for the wrong tax year, or assuming treaty coverage without checking specific income types. Don't forget to verify the exact reduced withholding rate in the treaty and make sure your documentation covers the income categories you intend to claim relief for to prevent rejections or higher default withholding. Here's a practical example. A US company receiving royalties from country X faces a default 30% withholding without Form 6166, but with the certificate and the treaty article in place, that rate can fall to 10%. That 20 percentage point difference directly improves cash flow and shows why obtaining the certificate can be essential for maximizing treaty benefits. Make My Financials supports clients from start to finish by assessing eligibility, preparing the Form 8802 submission, filing and tracking the application with the IRS, and ensuring certified delivery of your Form 6166. Our team handles the paperwork and follow up so you can focus on your business while we work to secure treaty relief and minimize costly mistakes on your behalf. Thank you for exploring how Form 6166 can improve your international tax position and cash flow. If you'd like a deeper dive into corporate forms like 1120 or 1040 next, or have specific treaty questions, reach out and we'll respond personally. Subscribe to Make My Financials for more expert guidance on international compliance and tax strategy.